Microphone check. Oh yeah, what's up, beautiful people? How you doing? Hope everybody's doing fantastic, wonderful, and amazing today. I'm gonna bring my mic down just under the red because I heard it yesterday. It was a little too much. All right, we got a swinging market. Let's get right into the charts right here. Oof, look at AMC go. Look at that. All right, so we're up 1.12%. AMC is swinging back and forth right around that 2450 range, which we talked about as something we wanted to break through, which we did already this morning. We're only 10 minutes into the trading day already, and we're still breaking levels. For SPY, we're looking at that 428.76, ended up being a key resistance area yesterday, and we tip-tap on that, retraced back in the early morning hours with heavy volume coming in. BBBY went for a run, came on back. GME looking the same. And AMC, the one in the green right now. Tesla up at 943, even at 1.5%, while the Qs are down almost 50 basis points on the morning. How's everybody doing today? I said microphone check. I said microphone check. 1 2 1 2. Well, guess what, my people? Pope loves you. Hey, let's rock on. Got a new playlist on the day from Epidemic Sound. It's called Lo-Fi Beats Essentials. See how we feel about it. Cryptocurrency staying about flat on the market cap since yesterday. So we've had a little bit of a pullback, but nothing too dramatic over here. Maybe that's why we're a little bit flat. I've noticed that the cryptocurrency is trading right along with small cap tech right now. All right, we've been 6 minutes live so far right now. It's 7:42 on my dial, which is 9:42 Eastern Standard Time. And apparently Walmart's profit rises as higher prices lift sales. That's interesting. Stock futures waiver amid retail earnings. U.S. approves nearly all tech export requests to China, data shows. Explosions hit Russian ammunition depot in Crimea. Cheney faces uphill fight in primary against Trump-backed opponent, Liz Cheney. Flush with oil profits, Saudi Arabia pours $7.5 billion into U.S. stocks from Amazon to Microsoft. Okay, so today's 13F filing day, right? So we're getting to see what all the big boy institutional investors did over last quarter. I always find this to be so funny because it's so much about something that's in the past and it's kind of already done. But they still, oh wait, this is what's going on. Buffett's doing this, Burry's dropping that. But I mean, they just have to kind of say their cumulative average of the trade. Who knows how often that position trade? Who knows if they have algorithms running that position, you know? It's not something that they can really measure. So I'm really curious about this day. You know, I don't see any particular driving narrative going on in the market. It just seems like this kind of limbo day, and where we have to stick to the charts to get our information. You know, we've found this kind of mid-level range that goes somewhere on SPY between 428.21 all the way up to 428.60. And this is a tight range. You know, that's what we call a consolidation range. And I wouldn't even know how to take this particular market at this moment. We're 15 minutes in, so that we're perhaps just at the point where we're establishing some base levels. I mean, like I said, SPY is relatively flat as of its close yesterday, and NASDAQ is trying to get under 50 pips down, but can't seem to do it. Let's go around. How's banks? Okay, so if we take a look here at some watch lists. Oof, all right, there we go. I was kind of expecting this first. If we were starting to see a pullback from this this rally that we've had for the past month, almost month and a half. And, you know, banks really led this charge. And so I was kind of expecting to see them pull back. You'll see FAS right here is it's a bear, financials 3X. And so when that's green and everything else is red, finance is down as a whole. And I like to always see where Bank of America, it's not too much, but we'll see what kind of ranges we develop for them over this week. All right, so Walmart's up big on its profit news that we just saw in the Wall Street Journal. Target's following and trailing that, as well as Costco, because they're all in the same sector. Twitter's pretty flat, but green flat. Coca-Cola's up and Berkshire Hathaway is up. These guys had a hard day yesterday. Block is the biggest one I have on this list, down at 2.5% down. And everything else is pretty much with Google's, Microsoft, Pepsi, Apple, Facebook, pretty much, you know, within 50 basis points. So outperforming the NASDAQ as a whole, at least. All right, let's see. I wanted to look at commodities. All right, so we have oil up 7.32%. So this was down big yesterday. So what that means is natty gas is on the rise once again. And oil is up, well, not too significantly up. It's just showing strength. Same with steel and the US dollar, as well as nickel. Aluminum is flat. Real estate is down just a little bit. And gold is down. It's kind of jazzy hip hop, I guess. It might put me to sleep. I don't know. Doesn't feel like morning's power hour type of tunage. Let's just, we won't break off this playlist yet. So, and I didn't see much of a headline here on Bloomberg either. Like, they find out how your retirement, personal finances stack up. It's like, yep, you broke, son. All right. I mean, I don't know what they mean by stacking up, but they give those calculators just to try to sell you on something. It's a click funnel. Still looking for any headlines that really stick out here. Like we said, we saw Walmart up pretty good, over 5% on a Walmart's beat lower profit estimates and boosts its forecast. All right, let's go over to shield numero uno. See what the old CNBC.com says. These guys tend not to really roll out like very much breaking news. While that's loads, I'm gonna pull up AP, like Associated Press. They have two different URLs. I just want to make sure I get us to the right one. Basically, everybody's just getting their news off AP, one way or the other. They're the only ones who still pay journalists. Walmart is the top headline. American Airlines agrees to buy 20 supersonic planes from Boom. Great name. Putin slams U.S., claims wants to drag out a war Ukraine to provoke China. Apple reportedly lays off 100 contract recruiters after committing to hire on a deliberate basis. Let's get a little bit more news about Apple. And speaking of which, let's get on back over to the stocks. Ooh, big pullback on Tesla, the Qs, and SPY. All right, we gotta take a look at here. So I'm gonna pull away from the Squeezability buddies for a little while now. We're gonna get a little bit of the bank stocks up in front of us. They're gonna be a dead weight, so you can see how the SPY isn't really trading like Bank of America, right? But when you start seeing a big pull down, you can see a weight that just kind of pulls back and holds down the SPY. It really weighs it down. I mean, you will probably see, we'll get out of Tesla here, bring up the Dow Jones average, and that's not reacting too much right there. But then here we want to bring up Apple after their news, and then here we're going to bring up Walmart because they might be buoying this market with their news. And essentially we're going to try to get a little bit of an average. We can see there was a big pullback here on that headline there for Apple, and we're seeing, look at these swings. I mean, look at what swings we're dealing with here. Of course, this is the 15-second chart, so we want to zoom out and get a little bit more sense of it. Not much has happened, right? You can see not a lot has really gone on in this day so far, but to get a little bit more data, we really want to zoom in because it gives us a better volume profile down here. Okay, Apple with a big pullback. We want to see if we can identify any other news. Apple slips after reportedly laying off 100 recruiters amid economic slowdown. So it's very strange that news brings a stock down, because not hiring so many people is actually better for the bottom line. But I guess that's really the headline news type of effect. The appearance of it all is enough to pull down the stock. But Apple's been giving us a lot of that news. I mean, every single time that news headline comes out, we see a dip, but they just said the same thing a few weeks ago. They were going to slow down hiring in 2023 and pull down the whole market. And that was the excuse for the whole market. And maybe it did have that big of an effect, but they said that was the only reason, and I think it was liquidity sweeps. Okay, so we established a new level, which is essentially kind of like where we were at open on the SPY, which is the 427.71 level, which is a little bit higher than where we were at open on the SPY. Okay, so SPY's coming on back to VWAP right now. We are 23 minutes into the trading day, and so I would say this is one of those points where it's about to make a move. Because of that, we happen to be right in between the range right there. This is where the algorithms like to kick in and do a liquidity sweep. So I would pull back from this, because it was, for me, this morning, it was a little bit difficult for me to really get the read. What I will do in a trading day like this is I'll pull back and wait. This is for me one of those pocket aces days. And I really want to understand the levels we're at. So where I see it right now, I see we could have a nice swing to the downtrend based on this, but it could also just bump off of the lower band of its VWAP for the day and head right back on up. So it's not the setup for me particularly right now. And so that leaves me wide open to take on any questions. Probably gotta change that thumbnail. Getting lazy. Man, green screen doesn't like my blue shirt today. Just want to be a little flashy, people. Damn. So, AMC is just sticking right around that 2450 area with some heavy consolidation in that range. Bank of America and financials swung right on back up. They are flat on the day, right around 36.25, a penny down. Apple with a big old pullback, and now Apple's consolidating. So as opposed to the SPY, which had that pullback and retraced to the up, Apple didn't quite do the same. So we're sitting around 172.23 level at for Apple, and the top area of this range was 172.78. So there's not a huge swing going on here. And so there's not a lot of upside versus risk right now. This is a wait and see approach for me, and that's my opinion. Tell me how you guys are trading this market. No, I hope you don't guys have to hear that. There we go. SPY's flying on up to that upper band of VWAP right there. To be expected. I'm going to be in for the long haul today, so. I'd have to change the shirt. Damn. It's my favorite shirt. Of course, I'm muted. I'll be right back, people. 2 seconds. Microphone check, mama microphone checker, mama microphone check, mama microphone checker. All right. See, there's that pullback that we were looking for. It's a really good setup for that. But like I said, this is where I was thinking it would probably stop its run, 427.95. Now, this is a strong pullback, but right now we're testing that. So we're at that 427.94. And here we are. Bouncing off a bit. Let's hold tight. I mean, remember that we're just 31 minutes into the trading day so far. We really haven't seen the setup that we're looking for. We can identify some swings, but I wouldn't say the risk to reward for this particular timing is worth it, in my opinion. Tell me what you guys think. There we go. Well, that's a good run. That's a pretty decent pullback right there, down to the 27.50 range. Okay. So if we're gonna take that, let's do ourselves a little favor. What we're going to do here, we're going to bring the cues over to the top right. I'm going to pull off of watching the Dow right now. We're going to bring up a double SPY layout on the top left and middle. And we'll see that right there. Make sure they're zoomed to the same level. There we go. All right, now what we're going to do, we're going to bring up the options chain right now, and we're going to take a look at what the closest in the money put looks like. Right here. I don't know if we'll be able to see that, so let me bring that in here. That. X that off. Bring that in here. Now that just came out with a SPY. 27. Oh, come on. They should make this a little easier for you. View it in stocks. Okay. All right. So we're there. Seconds chart data is not available. All right. So we're on the 1 minute chart. Doesn't show any off. Okay. So this is today on the 1 minute chart. Doesn't give us a ton of data that way, but essentially what we had was a put level that we discussed at 9:59 here at the, well, I don't have the very good data for this, do I? Oh, that's terrible. I'd have to bring this into Fidelity for us to do this analysis, but I essentially want to line up that swing and give us an idea of what kind of profit margin that was, which is so much easier for me to do on Fidelity than Webull. But it looks something along the lines. It would have been closed out. See, not much. I mean, actually, if this, like, this candle closed, and then there's this candle, and this is the 951. That's weak data. I gotta bring up Fidelity for that one. It's a whole other kit and caboodle. All right, let's bring Apple up to the top. Have that split in between the Q and the SPY. Bottom right, we have AMC, and bottom middle, we got BAC. And let's take a look at Microsoft. Whoa, super flat. Is a super flat, is super flat, softy super flat, and a yow. Damn. That's one of those no news means no news kind of thing. Let's check. 2 hours ago, Zoom slips as city downgrades, citing new hurdles to sustaining growth. We are in crazy times, people. I tell you what, it's like the first half of the year, it was all about like presumptive market reactions to like what the Fed was going to do. And the second half of the year, this time, is going to be all about the actual effects of all this stuff that we've been talking about for what feels like about 8 months since December and November. Just feels to me like that was all the presumptive happenings of what everyone would expect of the economics, but no one really thinks about the fact that it takes 6 to 9 months for any rate hike to kick in. So the ones from March don't really even start really showing their head till September to December. And we're already talking about the Fed turning course. All right, so we had one successful identification, one call out today. I noticed it was a pullback, but I also said don't trade it. We're trying to get a rough idea of what kind of value you might have gotten out of, you know, what is essentially here. I'm glad they gave me my drawing tools back. This isn't the options run necessarily. But it was base. There was there. Yeah. Yeah, look at that. It's a 0.27% move on the day. We were able to call it yippity-doo. Still wouldn't want to trade it. Still like that call. Apple pulling back, and this is what we were talking about yesterday. We're keeping an eye on Apple because if we see a major breakdown on Apple, major breakdown being something like under 170, for example, at this point, it's going to bring the market with it. That much is clear. Okay, so the banks were showing some weakness earlier, and they have regained a bit of their strength. Let's actually get over to that bank watch list really quick here. I think, yeah, we're seeing some of this turn a little green. At first, it was only the bear 3X, and now State Street and Bank of America have turned green on the day. Credit Suisse and Nomura Holdings being at the low end of the performance here. And it is a performance. I haven't seen any chats coming in here. Oscar, what's up, man? Not too much crack-a-lacking. It's a weird kind of day, brother. Like, there's not much going on. You know, I wouldn't call this the greatest swing trading day, you know, to save your life or your wife. No, not for real. No, it's you know, we caught a little bit of a call out, you know, right around 10 o'clock about 10 minutes ago, but I didn't want to trade it. And yeah, well, I think we're just sitting around waiting for a headline today. I mean, I was thinking that tomorrow would be a big breakdown day because it's a lot of times after the weeklies from last week settle and they hit people's account on Wednesday that we see a big shift. So I don't know. So far, not much we have to work with here. We're seeing swings that, you know, 27, 30 basis points. And here we are, swinging back in our range. We're at the 1 minute chart. I'm going to zoom out so we can get a little, or zoom in, excuse me, to the 15-second chart so we can get a little bit more data. Break down a little bit more of our volume profiles. We're actually seeing a bit of a volume surge come in. You can take a look with a little bit more of an extreme breakdown of these volume profiles. You can kind of identify a little bit more. See how that works? See that? You can kind of identify. Now, Bank of America is going to be one of your examples of something that really looks like it's barcoding throughout the day. Because it is. So we see we had this big old volume candle right at the end that tried to drive it down, the SPY down past the 427.58, and it was able to do so before the bulls snagged up all those shares at the 427.45. So we're talking about tight ranges. We're talking about high frequency trading coming in. And I guess we're looking for this next big boom boom volume candle, right? Like, notice how that peaked. This was at 10:02. And right here at 10:02. Not the biggest volume spike on the day for Apple. That was 10 minutes earlier. Keep an eye on 10-minute intervals. What's the difference in time here? 10:02 to 9:50. That's all right. Big volume spike at 9:56 for AMC right there. AMC's holding up. It's holding up above that 24.50 at 24.72 right now, bouncing back and forth 2% up on the day, just over. And I'd say that's pretty nice. Rock on, Oscar. Safe travels out there on the road for you, brother. It's a little bit sleepy, these beats. You guys want to switch it up? Let's go back to what we had going on yesterday with that base essentials. That was just about the right lively. Yep, this is a shout out to our man Oscar out there on the road somewhere trying to get the things from here to there and show the world a better place. Thank you for being out there, Oscar, fixing our supply and demand chain issues, brother. Keep on block rocking. We got nothing but love for you. Big pullback in Apple right here. 171.80. Ooh, there we go. That's the ding ding candle we were looking for. There we go. There's a pullback for you. SPY just broke through its lower band of VWAP, being heavily pulled down by Apple. And actually bring up Apple's pulling down here in the top middle. The volume on Apple right now is really, really firing up. Yo, beat same song. Microsoft pulling back big. All right, it's a pretty big move right now after nothing too much significant, so we're gonna bounce over to headline news. Just to really cover that discussion we were having earlier about Apple laying off those workers, I'm just going to read some of the takeaways for you here. That's a funky beat. Okay, so it was that article that said, Apple reportedly lays off 100 contract recruiters after committing to hiring on a deliberate basis. And the key points to and key takeaways from this article was Apple reportedly laid off about 100 contract-based recruiters in the past week in an effort to slow hiring and spending. In an effort, they're like, hey, get out of here. Stop hiring. It's the only thing you know how to do. We just stop it. Stop it. We're trying to make an effort to slow you motherfuckers down. All right, other key point is the recruiters who are responsible for hiring new employees at the company were told that layoffs reflect changes to Apple's business needs, according to Bloomberg, meaning, yeah, we don't need so much HR. You guys are a pain in our butt. All right. Let's see if there's anything coming up in the YouTubes. Sometimes it comes through YouTube faster than it does through text. Hold up. Russian economy gets boost from wartime grain shipments. Europe drought, Germany industry at risk as Rhine levels fall. I don't know if you guys heard this, but what they call them is I think they're called the weeping stones. And they're basically these stones that have been showing up along the Rhine, that they're written in this old like dialect, and it says, if you see these stones, cry. Because it shows a time of drought. And that's how Rome fell. Germany, 1 dead, 9 okay, that's just some news. Financial markets. AP's coverage on financial markets isn't so great, but I prefer that sometimes. Okay, so stocks open mostly lower on Wall Street. Walmart lifts the Dow. All right. Asian shares mostly higher, echoing Wall Street rebound. Actually, I didn't think about the fact that the reason why the Dow is holding tight today is because Walmart's on it. That's a good point. Thanks, guys. How major U.S. stock indices fared Monday, 8/15. Closing prices for crude and other commodities. Let's try to see how CNBC reports its futures and commodities. My favorite place is investing.com. But they give me pop-ups. Okay, so Brent. I love how they do this. Just say oil, 88, 82, but Brent is 94.29. You know, market to market, it's essentially everything's about 94.32 because there's a bunch of extra costs. Oh boy, I got a dump truck coming up out back. Sorry about that. I hope they don't decide to create construction right in front of this. They can do that. I'm in Costa Rica, baby. It's Wild Wild West. Oh boy, we have a big pump up in natty gas. Wow. All right, so let's actually get back to oil real quick on the charts, because I'm sure from when we reviewed it earlier, it's fired off since. I'm going to bring, instead of Microsoft, which is just seems to be getting towed along by the rest of the market, let's bring up that oil at 104. Wow. All right, now I don't know if this is a ProShares Ultra bullish natty gas ETF. This bottom left-hand corner oil. The inverse of it is cold, which is down 7.17%. Oil is up 6.54%. It's an amazing swing trade for the year. I'm going to show you. Why. Let's go out to the daily chart and look at the swings that this baby has had, right? So I was trading it like over the winter, and I was dealing with these 34 to 39 type of swings, and all of a sudden it fired off, and it fired off big right after March. So basically, when the market kind of had its first bear market rally there. And now look at these wonderful swings it had since then. Just by mid-March, we had a run up until mid-April, all the way to 111. Then it had a pullback, brought us down to the 72.82 range, right? That was about a week or two later. Then it had another run, and we're on May 5th right now, where it topped 125.21. Not too shortly after, on May 10th, it pulled back to the same exact bottom, 72, 73 range. Then it fired all the way up. Now we ended up at 135. And the date of that was at the end of May, coming into June. Let's see, actually, the data that was not that. It was May 26th, okay, but not too long after that. At the beginning of June, it actually brought us back down to 100 a share. That was a second double bottom in the 2 weeks, and then fired all the way up to 141. Look at that. And that was our peak in natty gas so far on June 9th. And along with the overall market, it pulled back heavily. So I started talking about this when I said I didn't really know much to trade for July because it just looked like a really strange time. And I said, well, if you want to look at anything, look at Boyle in the 40 range, because that's an incredible range for it. And now we've fired all the way up, come back to a 50% retracement at that 72 line again. Look at that. Look at how perfect it bounced off that. And now we've gone up and we're at the same double top that we were on July 26th. Okay, so all signs point to we have a pullback again on this and then a big draw up. Now the pullback looks to be something in the 80s range. I like buying this thing when it's in the 50s and 60s. So that's your pocket aces. If you see Boyle anywhere in, anywhere in the range below the 72, break down below the 72 and get into the 60s, the 50s, if you see that, that's your setup for a wonderful run. Now, I'm not saying it's about to pull back there. I think there's a very good chance we get an energy surge, but we have about 2 weeks for that to play out. So why wouldn't we expect to see one more swing back down to the 72, 75 range for Boyle after this run up that it has right now, and then see it swing slowly consolidating towards our next run up, which is going to be hitting us towards winter. It's basically August is over, and then the fuel costs for the winter start getting stockpiled. And we know Germany is going to be the one that really, really needs to get on that. Look, here we are, being on the daily chart, and look at us just tip-tapping on that 200-day moving average. This is going to be proving to be a strong, strong level. The current 200-day moving average for us is not changed too much from yesterday. Yesterday was 429.30, and from a day's calculation additional is 429.10. So it's coming right into that point, which I was talking about looking like Wednesday. So if it keeps going in this direction, it'd be pretty much right at 429, which is very. It goes a lot in line with the derivatives market and options expiration contracts. So it makes a lot of sense that we just round this one off to 429 as our break point, and either we break down off this 200-day moving average from there, or we fire up past. And that's where I said I'd say, okay, this looks a little bit more than just a bear market rally to me. And that would be my information on that. Any comments, questions? Anybody wondering what's going on? Just let me know. Ask me almost anything. No, you can't ask me everything. Just almost everything. All right, let's get back down to the 1 minute chart. Look at these swings on the SPY. Look at that. That's just swingalicious. It pretty much has the same trajectory as Apple. Apple just having more of a pullback. Wow, this is really playing out how we want it. AMC's at its all-time high for the day so far. Talking about 25, 27. Did you guys pick up your shares yesterday? I know I did. And I am happy I'm going to get some APE shares. I just really looking forward to the day I go into my Fidelity account and just see APE sitting there in my portfolio I don't care what its balance is. I'm looking forward to seeing that. And this is the grind. Gold and silver pulled back here. Platinum recovering from a heavy pullback along with copper. Palladium is down. For the softs and agricultural futures, mostly pulling back except for cotton. Cotton's got a run up of almost 5% today. What is going on with cotton? Not. The euro is gaining some strength on the dollar. And I was to expect this because we have European Central Bank is doing some easing. And I think part of their easing is actually buying up a little bit of our debt. So the quantitative easing they're doing, I think, is in conjunction with our tightening, in the sense that they're kind of nabbing up what we have to let off of our balance sheet. And we're buoying, the central banks are buoying, the Western central banks, I believe, are buoying each other to maintain the strongest currencies. All right. Boy, looks like we've got a yield curve additional inversion here. Let's go ahead and take a look at a 2-year, 10-year. I'll look on it on CNBC because the Fed one is only updated once a day. And we have been heavily inverted, and it looks like we're inverting more today. Okay, let's zoom in here. That's the 1 year. Let's just get to the 5-day. This is a comparison between the 2-year and the 10-year Treasury. And we're trying to get an idea of the spread because we are currently inverted, and we want to see if we can uninvert. So that's, oof. You can do it. You can load. It's a little dubsteppy, huh? Yeah, I think everybody's good on dubstep. Unless, give a shout out, you want the dubstep. Man, this is a grind of a day. What a grind. I tell you what. Yeah, check this out. Like, SPY's just going to consolidate right here. I'm waiting for that yield curve to load. And yeah, where we're at SPY for a level here is 427.42, down 0.34% on the day. And now we're having a significant pullback now. And it looks like AMC is as well, right? In the same time, NASDAQ at the same time, Apple, while oil is having a run up. And we see that Bank of America is having a big boom, boom down candle too. I can't help but think there's some news in here. Just bouncing back over to that yield curve for you guys to see it. Doesn't look like it's too bad. All right, well, what kind of narratives? Because they usually don't leave a day like this open to just like no narratives. Let's see. Let's just see what anyone's saying today. Some Bitcoin stuff. Oh, that's a terrible search. I don't like that keyword. Is this a joke? All right, let's just see if we can pull some shilling off of Bloomberg's YouTube channel. Big argument about China and who's to blame. Central banks all around the world. They've been around the world and they've been printing money. SPY bounced off 426.88. It's a pretty significant pullback considering this day. Buoyed by the financials. AMC seems to have found
painting the other side dark and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat.
This is what they're talking about on Bloomberg Live, Global Financial News.
Discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more
this is unbelievable.
We get better data, we can make better predictions.
If you look at
this is what they're talking about.
The last, let's say, 20 years, or maybe 30 years, 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
Oh, all right. Looks like they're gonna try to talk about something that has to do with the stock market now. My music's better. Alright, let's try to go backwards in time. And just see if they've been talking about anything.
Quickly, at 8:30 a.m. we get July housing starts and building permits. This follows what we saw yesterday, a massive plunge in the home builder sentiment on the heels of where we're seeing mortgage costs, the fact that rates have gone up so much. Do we see housing starts slow down as a result? This is really the push-pull in the housing industry. How much does the lack of supply end up propping up prices for longer than people can stand it? And at 9:15 a.m., we get the latest read on auto manufacturing, July industrial production. And John, I'm looking for a sense that, to confirm what we saw in the Empire Manufacturing Survey. Was that a one-off, the second biggest plunge in terms of Empire manufacturing sentiment going back in data to 2001? Do we get a reconfirmation of that in the auto sectors and other manufacturers, especially ahead of the next ISM read?
You notice how the pandemic broke the chart? It always does. Every single chart we have, the pandemic just breaks the chart.
Yeah, and right now we're seeing
say,
some volatility.
chart that bad?
It's getting close in certain metrics, and that I think is fascinating.
Ramo, thank you. Decent day ahead. I'm not going to say big day ahead, Tom. I don't even want to say big week ahead. We're light on economic data. We've got retail sales, got a bit of Fed speak here and there, some Fed minutes, Tom, coming up tomorrow.
I think a lot of it's the earnings story and what the stock market's doing, John. As I say, I think yesterday was crucially important for the stock market. Everybody's going to readjust to that. Buried in the Walmart release, John, and it's not a clumsy release, but there's not a lot of percent clarity in it. But two inside baseball things are Walmart, their gross profit rate, the margin, I believe, was down 132 basis points, 1.32 percentage points as well. And I love this language, John. Just one expense idea. This is a new phrase. I've never seen this, John. Wage investments.
Could you one day, Tom, write an article on the press releases that you do like and the press releases you don't like?
What I like is
based
they
on
get
the
better.
font, the style, the graphics.
Well, no. Usually if the form and the style isn't there, it's because they're trying to hide something. That's usually the case. What I want to see, John, is a trend towards clarity, and particularly the big banks, they're dramatically clearer than they were 5 or 6 or 7 years ago. And I want to, I'll be honest, folks, with the power of Bloomberg, we talk to these people and they really want to know, John, how to make it clearer. Mostly speak English.
Well, let's speak English right now. We can do that with Anastasia Amoroso, the Chief Investment Strategist at iCapital. Anastasia, the S&P up 17% from the June low. The Nasdaq 100 up close to 23% from the June low. When do we stop calling this a bear market rally?
We were just talking about that.
About now, John, and I think the market probably does not move materially higher from here. I think 4,300 will likely continue to be a resistance, but probably the biggest takeaway is that maybe we don't have to retest the lows that we have seen of 3,700. And the reason I say that, I think there's enough that's changed fundamentally to justify that. The reason why we were back at 3,700 is we worried about the Fed depressing valuations, and we worried about the types of cuts that we need to take to the next 12 months of earnings or 2023. And as we look around today, as inflation is easing, it's giving the Fed more wiggle room. So perhaps they don't have to continue to depress those valuations, because even if they hike 100 basis points,
SPY is driving for a swing to the upside right now. Looking pretty strong, and volume is not quite there.
We don't know where it's going to stop along the way.
So not a lot of conviction, but let's keep an eye.
Whatever. If inflation in the U.S. and globally comes down more rapidly than the wisdom, what does that do to your stock market call?
Well, I think it props it up significantly. I mean, we were just talking about Home Depot and Walmart, and this would be the types of stock that I would not be bullish on in this environment. However, if inflation does ease up and all of a sudden consumers have more wiggle room in their budgets to spend on things that are not
more wiggle room,
that props up that sector. You know, if inflation eases up and the
Fed
so
eases
up as a result
won't
of
happen.
this,
There's
we
no
can
wiggle
expect
room.
more from technology shares, from the high growth stocks, and so on and so forth. So I think that's a very important dynamic. But I think, Tom, in order for us to materially break above 40,
only really out of touch people are the ones that are going to say that just a little bit less inflation is going to create wiggle room for everybody who's spending all their money on food and energy right now. It's ridiculous. They don't understand the The quality gap, unbelievable.
300, and for us to work our way higher, we need to see earnings revisions actually turn the other way around. The reason why I say 4,300 seems to be the cap is because it's based on that $240 of next 12-month earnings and a multiple that's somewhere around 17.5 times. You know, how much more we're willing to pay. Yeah. I think the Fed would probably need to ease up.
My SPY level will be around 435, so we're
paying more. And,
we're pretty much in agreement on that.
Accelerate to justify higher earnings. I don't think that's the outcome right now.
That's exactly where I wanted to go. Do you think that it's too cute to believe that the Fed is going to push back against the essentially easing in financial conditions that we've seen over the past few weeks?
Yes, there's so much talk about that. And first of all, if you look at the easing of the conditions, most of that occurred in equities. And if you look at something like the Goldman Sachs Financial Condition Index, it certainly eased up, but it's still well off where it was just in the beginning of the year. And it's roughly at a 20-year average. So I think, yes, there's been easing on the market, on the margin, but it's not been that significant.
Yep.
The second thing
and that little rally on the SPY in the past 5 minutes is pulling back.
Outlined a pretty good reaction function. First of all, he said that they want to be a little bit more cautious as they get to neutral, and we're now close to neutral. They also want to be a little bit more cautious because they know that the tightening that's in the system acts with a lag, and we put a lot of tightening, and he said these words, that there's more tightening in the pipeline. So let's just see how that plays out. And then the third part of this reaction function that he's outlined is if inflation continues to surprise to the upside, we will do more. But if it doesn't, there's probably a case for us to do less. And, you know, to Tom's point, we are chipping away at more and more pieces of the inflation puzzle. So I think against all that, the Fed can actually maybe let the financial conditions ease up a little bit and still do a little bit less going forward.
Lisa, did you hear what I think I heard, which is Chairman Powell did a good job? Did you hear that?
Yeah, that basically...
I think a guest actually just said Chairman Powell did a good job.
I think that she's not alone in thinking that. Some people think that the ambiguity or just sort of holding the line is the way to go.
Anastasia Amoroso of My Capital. Tom, that was on the edge of you.
It was.
Chairman Powell's doing a good job.
I believe that all the central bankers, given an historic medical event, are making it up as they go. I can't say that enough.
You're just being nice to your friends ahead of next week in Jackson Hole.
That's what,
so they speak to
the
you.
Chairman and I, look, I mean, folks, here's the way it is. Before the chairman gives a speech, and to be honest, I'm on a plane, I believe, before he gives a speech. I can't remember the schedule, John. But the fact is, he and I will be at the Pioneer Grill, and they've got their acclaimed, it's like a full English, John, except it's a full Wyoming. And, Chairman Powell and I will dig into it. And
just to be clear here, you're flying into...
All right, we're going to skip ahead here.
National Bank did is they basically came in and they're going to use the currency to tighten financial conditions and get ahead of the curve. So the ECB still has to use the euro as an anchor. It's just, and again, this is probably why people are confused why the euro's a bit durable. Euro was at 103.50 just a week ago in the backdrop of all of this. So I think the euro is probably even a little bit stronger than what people would hope. But I think a part of it here is the ECB still has to anchor rates, and they still have to keep rates relatively high to stabilize the euro, because a weaker euro actually creates more inflation.
That's if you believe that higher rates from the ECB lead to a stronger currency. Mark, that's not happened with the Bank of England and sterling. Why would it with the ECB and the euro?
Well, I think a good point is it's about relative expectations. The market was very bullish on how many rate hikes they thought they were going to get from the Bank of England. And basically, the growth stories deteriorated so rapidly in the UK that, relative to our expectations, and I think where the market's moving, is that the Bank of England's not going to deliver. Basically, you've got probably 50 basis points more priced in more than what they're going to deliver on. And I think for the ECB, the market was a little bit more complacent, and the ECB's kind of outperformed a little bit, at least over the last couple of months, delivering some hikes. And then again, you do have what I think are important nonlinearities, that reserve currency, reserve managers. Looking at Europe with negative interest rates is not very appealing for central banks and reserve asset allocation holders. So if we do kind of think about relative euro sterling, there's been more disappointment on the UK side. The Bank of England has more room to price out what was priced in earlier. And the ECB, I think, has at least maintained what they should have done and maybe over-delivered relative to where pricing was a couple months ago.
It's fascinating to me, Mark, that the calls that you have usually are spinning away from the dollar. I've noticed that they're crosses that are not having to do with the greenback. How much is that by design? Because the dollar is going to be a risk-on, risk-off trade that is somewhat divorced from some of these other fundamental characteristics.
Yeah, I think what's interesting is that where the peak U.S. inflation themes interesting, because what we're doing is we're seeing less volatility. We're seeing volatility come out of FX. We're seeing volatility come out of rates. So the market is kind of exploring a EM-based carry trade. So the Mexican peso looks relatively upbeat, and some Latin American currencies look upbeat. Some of them are being simulated and supported, like Chile. But there is this little narrative that's happening right now that is we're kind of evolving out of peak inflation and peak Fed pricing into something that's not super bearish for the dollar, but people are exploring where there's too much risk premium and where we do have carry. I think in the G10, though, we're still in the same trade, which is there's too much idiosyncratic risks in the Eurozone. We do like selling Euro NOK Norway into the Norges Bank, again, because we get another rate hike. We've got a country that has pretty strong fundamentals. The currency is extremely cheap in terms of the way we look at Norway relative to the macro story. And I think what we're doing is we can kind of unpack the dollar a little bit and look for some idiosyncratic risks, like our EM team is long Indonesia, which is another interesting story when you look at equity flows and how things are evolving in certain parts of Asia. So I do think it's time that we could explore another regime change, or at least another shift in the narrative in FX, with peak dollar coming in 2023. But right now looking for things that look a little mispriced against macro stories.
Well, at least foreign exchange isn't boring anymore, Mark. We've said that a few times over the last few months. It was for a long time. Mark McCormick of TD Securities. It is not now. At least euro dollar, 101. Where are we now? 101.28.
Yeah, 101.28.
We are seeing some strength in Apple right now, and it's definitely buoying up the SPY. We are currently 9 minutes removed from an hour and a half into the trading day. And it's just been one of those days. It's been a grind for any of the scalpers out there. There really just hasn't been too much you would want to scalp, in my opinion. Let's go around the markets, see what kind of top gainers and losers we've got, see if anything sticks out for us. All right, the top 5 performers for the day as listed by Webull so far are GBOX, green box positions, Forza, FRZA, X1, My Size, which is MYSZ, Artello Bioscience, and Sky Water Technologies, Sky T, and Veritix Bioscience, AMTD. It's got another big run. Look at that. And then Bed Bath & Beyond, blowing everything else in the meme area out of the water. What do we have with some big market cap here? The AMTD is just blown up. We have Global E Online, GLBE. And for our top losers on the day so far, hopefully none of these are in your portfolio. Oh, we're seeing big pullback on Bit Mining Limited, BTCM, 41% down. RBT Rubicon Technology, 37.92% down. Save Foods, FFD, that's Sam, Victor, Frank, Donald, down 36.66%. Hallmark Financial Services, I'd like to look into that. At Hall is the ticker. POL, Polished.com Incorporated. GoCo, Go Health Incorporated. CASI, CASI, CASI Pharmaceutical. Sunlight Financial. So we're seeing some pullbacks here and some outliers on the fintech space, which is something that piques my interest here. Nothing too huge of a market cap, but I do want to take a look at this SMFI just to see what it's all about. It's formerly CM Life Science. It's a patient-centered health intelligence company that is focused on advancing healthcare through data-driven insights. All right, that's not, I don't really do that sector. I just don't know enough about it, and I don't know enough about how to get data on it. I'd rather short a bank or go long on a bank any day of the week. Just how I am. Okay. Check out Rubicon Technologies. Not much there. This is the other one I wanted to look at was Hallmark Financial. Hallmark Financial Services, an insurance holdings company. The company, through its subsidiaries, is engaged in the sale of property and casualty insurance products to businesses and individuals. Where are they based? All right, well, they're based in Texas, so they're probably underwriters for auto business, casualty business. Wonder what was their news. Just gonna take a look here. How much money are they losing? Wow. Earnings per share down $3.82. Okay, so that's a significant pullback. Any big changes in our futures market? Natty Gas has pulled back from its high of the day, as has that Boyle ETF. Oil and Brent oil are down, and RBOB gas is down. So far, the only performers out of the top 5 for metals is platinum and copper. The usability buddies are the metal factories, the metal group, and then cotton, pretty much the same there. Only seeing more strength on the euro versus the dollar. And the biggest one in the softs was just cotton, still around 5% up on the day. All right. Now, the range that we're in on the SPY right now is something that has acted as support and resistance throughout the day, with enough touch points to confirm both sides at 427.43. And we're breaking down past it. We're already below the lower band of VWAP. So it's a significant pullback. Apple is pulling back as well. Qs are pulling back. AMC is all the way down to 24.12, which is just barely above where it opened today. And Bank of America is pulling back as well. Natty Gas pulling back, just a tightening of liquidity in that particular moment. See if we can find anybody talking about the meeting minutes on the Fed that are coming up. I don't think there's going to be too much of a reveal there. The only thing that we're going to look at when those meeting minutes come out is how much they're talking about quantitative tightening in September. Well, we'll see what the boys over at Day Trade the World are thinking.
Other than that, man, I want to trade Bed Bath and Beyond at some point.
Bed Bath and Beyond,
they're swinging.
If you're looking for that for long,
Bed Bath and Beyond.
It's giving you opportunities. It's back at 21. I just feel like if you're going to short something like AMC or maybe some of the other squeeze names, they're just safer. Like since that recent high, AMC's gone from $25 down to $24, and it keeps on trending. I just talked about reloading this instead of Bed Bath & Beyond. BBBY is back at the high of the day. It got 21 break. It's still at that high. And we're going in the other direction here. But it's been a wild morning. I don't think it's done yet. I just want to quickly...
The Tiger Man better.
The Tiger Man is ready, but I just want to point something out. If you're still holding...
Those guys are high energy. I've been thinking I might actually do something similar like that, where I just day trade like crazy all day with maybe a paper trading account and just have some fun with it. Oof, AMC with a big ding candle right there, down to 23.69. We've got Bank of America in the middle here. That's showing some strength on its all-time high for the day. One thing that I noticed those guys were long on is this NU. They were both long on it at the time. It's up 16.24% at $5.44 a share right now, essentially up 76 cents on the day. And it's had some big swings, and they are long on it right now. What is this company? It's a Brazil-based company that provides digital banking as a platform. The company offers its customers products across the 5 financial seasons: spending, saving, investing, borrowing, and protecting. Yeah, big. That was just an alert for AMC losing 3.5% in a short period of time. Its spending solutions are designed to help customers pay for goods and services in their everyday lives with a customized credit line or instantly through a mobile phone, while collecting loyalty points and rewards on applicable transactions. That is pretty cool. Bed Bath & Beyond just cannot stop going up. 34% up over $5 on the day. This is really the story of the day. If you want action, you want to trade something like this, but damn. Can it keep going? When you look at something like this, like a Bed Bath & Beyond, it's up 33%. Like, let's zoom out here for a minute. Let's go to the hour chart. Just see this for a little while. It's come from $9.34 on the 10th of August. Excuse me. And it's at $21.43 now. Look at this news report from an hour ago from Shill Market Watch. It says Bed Bath & Beyond stock pulls back after analysts say investors should sell, citing unrealistic valuation. And, okay, so that pulled back an hour ago, is that right? So, where's the pullback on Bed Bath & Beyond? Where did it pull back? What? At 10:30 up until 10:46? Okay, so when was this article printed? Let's get it exactly when this article came out from Market Skanks. Last up at 9:19 a.m. Eastern Standard Time. Stock pulls back at 9:19 a.m. Eastern Standard Time. This is before the market opened, and it just ran up 30-something%. Where are we? Can you guys see this? Look at this. Bed Bath & Beyond stock pulls back after analysts say investors should sell, citing unrealistic valuation. All right, and let's just bounce back to the chart and see how it did immediately after this sentence. Like, unbelievable. The shillionaires out there. Like, so, okay, so where's this pullback? All right, so we're not looking at the actual day. It was 9. This thing was published right there. And it has done nothing but go up since then. So that's Shillionaire Report number 1 for the day. Checking this unbelievable article. All right, so we're going to put the log for all of the authors that author stuff like this. This is Tommy Kilgore, but it's Tommy with an I. And it says we can follow them. I think we should follow all the shills. Let's get the latest from Tommy Kilgore. Let's see here. All right. Tommy Kilgore is Market Watch's Deputy Investing and Corporate News Editor and is based in New York. Good place to get tips, Bubba. All right, so some of Tommy Kilgore's recent articles include brain busters, such as groceries take more of Walmart's customers' wallet share amid high food inflation hurting gross margins, as Walmart is up 5.58%. Walmart stocks jump after profit pulls a classic beat the guide down. All right, we already read the Bed Bath & Beyond one. All right, a little bit earlier in the day said Weber's stock jumped after launch of cost-cutting plan that could save the company $110 million next year. And then the fifth one here is Lumentum stock slumps after earnings beat expectation, but outlook was downbeat. Weber stock is down. The only one he looks like he's got right here out of the 5 is Lumentum, which is apparently ticker LITE, light. Earnings beat expectations, but outlook was downbeat. All right, so let's see what Lumentum do. That came out at 7:45 a.m., and it looks like that might be the only one. We're going to do that bottom middle. Apple's making a run, so that's driving up SPY. SPY is about to test its 200-minute moving average right here, which it seems to be rejecting off of right now. That level is 428, roughly. And here we're going to just take a look at light down in the bottom middle. And we're going to look into pre-market. It was right around this time. Stock slumped That's correct. Then they recovered. And now they've essentially flattened out. Oh, I got a sneeze coming here. Oh, that mute button is fantastic. Bed Bath & Beyond still running. Can't keep that baby down. All right, so shill for the day is Tommy Kilgore. Go ahead and send a little tweet. Why don't we message him right here? We got his Twitter. Let's just thank him for his good advice. Let's thank this guy, Tommy Kilgore, for his great advice on Bed Bath & Beyond this morning. Do you follow Shills on Twitter? Okay, let's just let that load while we bring up the chats. Look at Bed Bath & Beyond. All right, finally seeing a little bit of a pullback there. Big ding-ding candle on that one, bringing it back down to 2250, which is a strong range. But still, it's up 41% on the day. And it's the ticker on it right now. It's going crazy right now. Like if we watch the 1 second chart, look at the difference between everything else and Bed Bath & Beyond. Like, look at how everything else is just little dots here and there. There we go. We're seeing that strength on SPY. Look at the volume. Bed Bath & Beyond is definitely under heavy attack right now. SPY's going for a little bit of a run here. Of course, everything looks like more of a run when you're on the 1 second chart. Just thanking Mr. Shill for his shilling. Anything else you guys think I should say? Thanks for the great advice on BBBY before market open. Good one, buddy. What a jerk. In Spanish, it's called peleón. They help themselves with picking little fights. All right. Expect to see a little bit of bullish activity in the crypto markets. Okay, SPA's leveling out at 428.50. Just a little bit of a pullback on Bitcoin, but not much going on in crypto. All right, let's get that out of there. Nothing new there. Let's see what Bloomberg has to say. Let you guys watch the charts while I get that stuff ready. That's a grimy beat right there. All right, we got something coming in from Bloomberg Live regarding the recession model shows Fed soft landing is hard to stick. There's not really such a thing as a soft landing. Let's see what they have to say. Oh, they're not going to give it to us. Never mind. I tell you, I finally get my stream right, and there's no noose is good noose kind of day. Alright. Watching this at the 1 second chat is making me a little crazy. Let's zoom on out here. Wow. What a good old run we got on SPY right here after seeing that strength in Apple. Bed Bath & Beyond did pull back slightly, but it looks like it's ready to make another charge up. I want to bring up GME bottom middle. Look at the swings on GME today. Baby. Wow. So AMC opened the day at 24.04. It is currently 23.82. Previous close was 24.21. SPY is making a beautiful run here. All right, let's zoom on out. Okay, we've broken through our all-time high of the day. We're at the 428.91. So that means we are 20 basis points away from tip-tapping on the 200. So, okay, so this is kind of a pocket aces moment here. All right, and just to kind of practice this particular technique, I'm going to bring myself over to my paper trading account here. I wasn't sure if I was going to do this with everybody, but I think it's fun. And why the heck not? So what we have is a moment where we're at one of those levels that's just fantastic. We're within 20 basis points of the 200-day moving average. And this is an awesome spot to grab up a little bit of something for a short. So right now, what we'll just do really quick, I'm just going to sell 10 SPY at market. Right there on my paper trading account. Now what I'm going to do is I'm going to trench in My intention is to have 3 lots of this. All right, now we're having another spike up. We're at 429.06. All right, I just bought 10 SPY. Now what I'm going to do is wait till we get that 429.20 and see if it breaks. Now, basically, my out on this is about 429.50. That's what I'm willing to lose based on this level. All right. So if I see 429 and 20 basis points hit, I'm going to trench in with another 10. And we're going to let this play out. Right now we're on the 1 minute chart, but because I'm involved with this trade, I'm going to zoom in a little bit more and get onto the 15-second chart. So let's see down here. It's a position right now. My cost basis 428.97, and I'm shorting. I'm selling those. And what I'm waiting for is to see it. I mean, it should consolidate here at some point, but I do want to get a chance to let it go to that 429.20. Or, excuse me, 428. No, 429.20. That's right. And I'd love to get another opportunity to get one more lot in at that fade price. Unfortunately, it's pulling back a little bit before. So this put you in that position where you wanted to be in this position a little bit more before the action went down, but it already played out the way it did. So what I would either do here is you can take a quick out and wait for a retracement. But you're not getting too much of a profit right there. And what we're really what I'll do here with this particular pullback is I'll let it pull back to the 428.50. And like I said, my stop is 429.50. If we head towards that range, and that's a very tight stop, right? So I think that's probably a weak stop in terms of just letting it fly. GME just had a big boom boom candle. That's beautiful to see. Let's bring up, we have Amazon down there. We need Bed Bath & Beyond down there, bottom left. Bed Bath & Beyond is squeezing. And I'm going to buy 10 of that just to... No, it's a really weird time. It's a really weird time. I'm not going to buy 10 of that. Wow, it's really squeezing. If it keeps going, if it gets over 25... 26, it could really run. Wow. This could be a fun afternoon. Good, we need a little bit of excitement. That's one of the reasons I want to just be here live streaming. It's just be able to catch one of these moments, because I do expect something big to come at us in the next month. And I want to be here. SPY's holding tight right there, 428. 90, right around where I picked it up. I'm not missing when I'm at 428.97, so it's just right in that range. Not too much going on there. GME had a nice spike. GME on the day is finally positive, which is nice. AMC still negative, which it has been for since 24/2/22, about 30 minutes to an hour. Bed Bath & Beyond can't stop running. Let's just grab 10 on that just for support. Just to support the boys and girls. Hoping this thing runs. This is my paper trading account, so there's no actual support there. But yeah, I just grabbed up a quick 10 because this squeeze is incredible. If I was really trading right now, I'd probably be trading that a lot more seriously. But that looks like the news for the day, really. Story of Bed Bath & Beyond. My God. GME with a nice boom boom candle. AMC following suit, but not quite as big. BBBY is carrying some of our squeezability. BBBY with a halt. Is that a halt? Nope. Okay, it was the tiniest of halts. Ooh. This is getting really, really good. Come on. It's got to break over this. Bed Bath & Beyond looking to tickle with 27. Oh my God. GME making a run. GME just went from flat to 4% up. AMC, same thing. Just went up about 3% on the day. Up at 1% now. From when I just last reported down 2.5%. All right, we're going to switch up this layout a little bit. I'm bringing GME down to bottom middle, bringing Apple up to top right. And so we've got SPY, Qs, Apple at the top, and Bed Bath & Beyond, GME, and AMC at the bottom. In that order. GME running. Oh, shit. I think it's time for a safety meeting. Oh, this is the story right now. Let's change this up. Oh my God, Bed Bath & Beyond hit that 28. Oh, that's strong. Did they halt? They did. Bed Bath & Beyond squeezing. When I last said they were squeezing, they were at 50% up. Now they're 75.25% up. Unbelievable. Let's go. Oh, that's strong. Oh, this is incredible. Let's go. All right, sorry, I just had to set up a little bit of a switcheroo on the title for the video so everybody knows we hit a wrap about the Squeezabilities today. All right, so Bed Bath & Beyond is on a halt right now. Oh, baby. Let's see where she opens up. GME on a fiery rise, 9.37% up from $39.93 up to $43.50 since 11:25, the past 5 minutes. That's exciting. All right, we're on the 15-second shot here, people. Look at that. Oh, I gotta pay attention to my paper trading account. I had that move and I got too excited about everything else. All right, well, I would call that a loser. This is what I was worried about, doing trades like this while I'm also, handling the broadcast, right? Like, I wouldn't really do live money trading until I've got a good 6 months of practicing doing this broadcast with y'all and trading at the same time, because I will get distracted and I will lose my train of thought just trying to keep everybody else informed on what's going on market wide. So in other words, my last trade, that SPY pullback, was nice until I got excited about Bed Bath & Beyond and didn't pay attention anymore. Started looking to change the title on the YouTube video. So I closed out that position for the day as SPY is running us all the way up past, we're at right now my stop loss point. So I actually just kind of self stop loss just a little bit before there and got to 429.60 we are now. So we have actually broken past that 200-day moving average, a major level, and I would absolutely expect it to pull back from here. That's why I thought my stop loss was probably a little bit too tight, because if you have like a 430 stop loss, probably not going to get stopped out. All right, Bed Bath & Beyond has woke back up from the grave and pulled back roughly they pulled back as much as $1 on the halt, but now they're back up over 70. So they're trying to get back up to 28, break over that 28 level. GME is at 12% and having a run, $44.55. Oh God, thank you. Light up this morning, wake us up. God, we were snoozing all morning. GME, the story of GME's price action, you can see it right here throughout the day, up until this moment, is pretty much what we had, just a snoozer until we had some action here. And I'm glad to see it. Let's see now. Apple is trading flat right now. SPY is at 13.13% up. And NASDAQ is down 27 basis points. Or I should say just 0.27%. On the day. They've been surging back right now for the past hour or so. And we'll just call it 30 minutes. They've been surging back about half an hour. And it looks like the strength of that has a lot to do with Apple, like we were talking about. But the real story we've got going on right here is our Squeezability buddies. GME being the most exciting right now on its particular run. GME got a halt. GME got a halt. Yeah, baby. GME's on a halt right now. All right, so that's it, Amy. Come on, AMC. You're next on the list. Let's see it. Let's see it run. We're at 2483 on AMC, and what we want to do is we want to bust our ass right on through that 25 wall and see what it's got for us. Apple pulling back, which is also pulling back the two major indices. Bed Bath & Beyond is pulling back down. It's now $26. Heavy volatility. Unbelievable volatility. Look at this. Oh, it's pretty. It's so pretty. Well, we gotta be careful. I'm gonna become a Bed Bath & Beyond fan all of a sudden. I never liked their soaps. All right, 25. So we got a swing and a big pullback on Bed Bath & Beyond right now, to be expected after a run-up like that. So we're pulling back to when I first started reporting on it, really. We're really kind of back into that zone. And so we're gonna, like, the next level I think we have here for Bed Bath & Beyond that might serve as support is 24.30. And we might not even have a chance to test that, but it's 24.30, then 22.88, then 22.27, then 21 on the way down. On the way up, we're going to have resistance at 26.48 and 26.02. And so basically this thing is just swinging and rocking right now. Like, how long is, all right, let's see how long GME is halted for. And looks like it's just ready to come off its halt right now. No. Been halted for 5 minutes now, so this should be a 5-minute halt. If it's a volatility halt, it can be 5 minutes or infinite minutes. Seeing a big pullback on BBBY right now at 23.50, so we're hitting that first level, and it looks like we've got another halt. AMC flat right now at 24.12, had a big old pullback from its run up. And all right, so GME just came out of the halt down to 42.33, so they had lost about 50% of their run up during that halt. Because, you know, as the halt happens, one of the things about them is the orders are still stacking up, right? They're still stacking up. So it's a perfect time for an institution to come in and spoof the bid and ask price. And that's why a lot of people who trade don't want to be involved in things that are halting. And some people do. But this is the type of volatility that should set off red flags as to why we really have seen this much liquidity pile in. It's the fake money. All right, Bed Bath & Beyond is on another halt right now. This was a halt to the downside last on this one. Last time was a halt to the upside, so we might see that reverse course. Yeah, it is exciting, man. These halts are kind of crazy. We were at a sleepy morning, too. Man, I think I almost put myself to sleep talking about the stock market this morning. Tell you what. But it's something, though. All right. GME is slowed down. It's consolidating right around the 40% retracement area. 42, 42. And AMC is just sitting there. Like, I think that's the next one we're ready to see. This is the one they're trying to suppress because the volume on AMC is ridiculous. The volume on GME just opened up like crazy as of 11:30 Eastern Standard Time. So it's really been this, like, basically 15-minute craziness, just basically like all the top has been blown off because Bed Bath & Beyond just took it to another level. Now we're seeing the SPY sit right along that stop loss zone of mine, which is the 429.50 that I had detailed out. So liquidity sweeps aside, I can't imagine us hitting 430 right now. If it does, very bullish move. But to me, it looks like the volume's drying up, liquidity's drying up, and there's a bunch of people that just focusing on these squeezes right now. We got Bed Bath & Beyond halted again. It's at 23.52, 47% up on the day. GameStop is running up from its last halt that took it down a little bit, and it's back to 9.43% up, $43.25. AMC taking another run up, thank you, sir, beating its 24.50. We're at 1.20% up on AMC, so it's the laggard. And you know, Bed Bath & Beyond having been a runner for a little while now, we have to wonder, what are these catalysts? You know, is it this dividend? Oh, here we go. So GME wants to test its all-time high for the day again. It's going for it. That's 44.47 right now. GME is at 44.34. It's bouncing fast. There's a lot of volume coming in, so these prices are changing quick. It's right there. It just tested it, beat it, broke it, busted it. Now we're going for 45. We're at 44.90 right now. AMC is about to take another swing up with everything. It's at 24.70 right now. Bed Bath & Beyond still on its halt since 11:37 Eastern Standard Time. That's 5 minutes now. 5-minute halt. Volatility halt. GME's got to be on a halt pretty soon. 12% up. So GME made back its losses from the last halt. It recovered all that. Now it's pulling back. AMC pulling back. Didn't get the run. AMC is being held back from this more than anything, which makes me really excited for the afternoon. All right. Bed Bath & Beyond still on its halt. Volume on Bed Bath & Beyond is crazy. Okay, Bed Bath & Beyond off its halt. And the halt didn't have any sort of gap down. It stayed roughly flat, but a lot of volume poured in during that time. It roughly balanced itself out to about even. So that was kind of a break-even halt for Bed Bath & Beyond, and it's trading right now high volume, but it's consolidating at the 23.75, 23.80 range. GameStop, 44.56, right around that 44.50 range. It's showing super strength and fantastic volume. AMC is not showing the same volume profile as the two others, and right now it's right in the middle of a range. This is something that looks much more like a liquidity sweep than it as if it's riding the same exact trend as the other two. So we're going to assume that AMC with its particular dividend issue might be the catalyst or trigger for this, but also the one most likely to be held down. All right, and this gives us a great opportunity to fade SPY. Oof. Where's the liquidity if we fade SPY right now? So it's that Apple breakdown that I'm waiting for, but I feel like fading SPY so bad. All right, I'm going to grab up 20 on a fade on SPY. Bed Bath & Beyond. Oh, insufficient funds, huh? I'm working with what, 10? Yeah, I started with 10. All right. Let's build. Oh, its positions work. Oh, it's working. Got it. All right, so I'm putting in a fade on SPY. That just landed me at I got an average price of 429.36 and immediately went against me, but I'm going to hold out on this one because I've seen it consolidate long enough that unless it, triple tops and then spikes up from there, then it'll be a losing trade. I'm going to leave my stop loss at 430 on that particular one because one of the bigger problems with the last one was just the tight stop loss. I mean, it definitely moved against me, but that was after the short-term move for me, which is when ideally that's when you just get right out of that trade right there because it just went in your direction. So take profits, baby. All right, and getting back to our squeezability buddies. Bed Bath & Beyond is coming up on its 26 range again. AMC has recovered a bit and some volume is trickling into it, and GME is consolidating at the 43.75, 43.80 realm right now. So we got to take a second here to see where we're at in the day. We're coming up on what they call the quote-unquote lunchtime. Got another hour and 15 minutes until the repo program kicks in. So this is swing away. Let's watch. There's nothing to hold us back for a little while. I think meeting minutes come out in the afternoon, 2 p.m. So we're good. So this is starting to show weakness for the first time in a while. So like our volume is fading off of GME. So that looks like a fade. This BBBY trade, let me see, what was my... $25.58 was my average price on BBBY, so... Another one. Perfect example. So like always, the in and out, when it goes in your right direction, right off the bat, go ahead and take your profits and enjoy it. I think we've got another run for BBBY all the way up to that 70%, which was around the $27, $28 range. I think we got plenty of time for another run for these babies. So we can see that they're cooling off, settling down. What we want to see is consolidation at these ranges and not major breakdowns. I'm going to stay convicted with my SPY puts. No, it's not puts, it's just shorts. And we're going to let some of these play out. Now what you're going to want to look at here with AMC on its pullback, it's at 24.18 right now, but a strong level that I'm seeing for support right here is 24.05. All right. Bed Bath & Beyond volume profile is picking up. Same with GME. We're also seeing the Qs and SPY running up against my trade personally, but my stop loss at 430 on the SPY. If it gets there, I'll pull off that trade. I'll take that off the deck. All right, we're getting that Bed Bath & Beyond run up. We're back green on that trade. Now what I'm gonna do, because I see we're swinging here, I'm gonna take some profits. We're at 5% on a short-term trade here. So what we're gonna do for BBBY is we're gonna buy back. Oh, oops. So we'll just quickly short sell that. All right. And we should have 2 orders for 10 working. All right, good. I think we'll have an opportunity to swing BBBY for a little bit more. So as opposed where the SPY trade is going a little bit against me, but I'm okay with it. It's within a range that I was expecting during this time. I'm fine with the consolidation. I'm expecting a breakdown on Apple, right? But the Bed Bath & Beyonds, GMEs, AMCs, I'm seeing swings right here. And so that's what we're getting. So right now, Bed Bath & Beyond is pulling back, drop down now below my cost average. So when I put those filled orders in, let's see, we bought. How did it work? Oh, that was the second accident. So I got it at 25.83, sold it at 26.66 and 26.67. And then I accidentally bought a 26.82 when I meant to close my position quick. That's okay. I don't make those click button mistakes when I'm not paper trading, ever. So that's okay. The SPY trade for me, the put, is just down 0.08% as of right now. And what I'm looking for is to make sure that my risk versus reward is essentially going to add up to be around 0.1. But it's 0.15 is what I'm willing to risk for the downswing. We'll see. And that's actually a fairly loose risk reward, meaning not a really great risk reward situation. It really isn't. It's just, the main reason I would do this, because this is a scalp right now, is because even though this is a scalp and that we're zoomed in on it, it's a major level because it's the 200-day moving average. And that's why I'm willing to play it on a scalp, even though the setup, the day trading setup for it's not so nice. I'll stay convicted with that, and I'll look for some entry points on BBBY in order to play the swing a little bit more. Right now it's at 26.35, 26.40, that kind of thing. A lot of volume still pouring in, but the volume has pulled back some from 15 minutes ago. AMC consolidating in that 24.20 range. GME in that 43.80 range. Now pulling down to 43. Let's call it 43.65 range, and then Bed Bath & Beyond at a 26.20 range. And this is a Comm before the boom booms. I actually think this is a position to fade the runners. So I think we'll see a pullback here. I'm going to fade BBBY for 10. And this could bust me pretty good. This could bust me. This could make me look like a fool real quick, especially with the volatility and volume we've got on it. So what I'll do is I'll keep what I like to call manual stop loss, was just keep a steady eye on this baby. Now we are seeing GME and AMC break down at this moment right now. Bed Bath & Beyond hasn't had that breakdown yet. So, and it being kind of the big daddy right here. So I think this is a very, very sketchy trade. Could very quickly go against me. And we're just going to keep an eye. All right, so it is going against me as of now. It's hitting on that 27 level, and it's broken that 27 level. And now she's firing off for the moon. All right, so we're going to cover at a loss on that. That's what you get for betting against the big boy. Squeeze a Billabuddy on a certain day. I'm still fine with SPY because SPY's going to pull back. 429.90. Thinking about tapping on that 429.30. Big strength coming from Apple on that one, and we've seen that even though AMC and GME pulled back for a little bit right there, they did fire right back up, showed strength, and BBBY is testing its all-time highs for the day. Oof, she pretty. She's so pretty. Yeah, I agree, Oscar. The music helps me too. All right, how long have I been going for? 2 hours and 15 minutes. I think it's time for a safety minute meeting, brother. leave the tuna, John. Be back in a minute. Oh yeah, beautiful people. Microphone check. Mama microphone checker. Mama microphone check. Microphone checker. All right. Hope these tunes are rocking out. Sounds all right. All right, so we have SPY at that 430 range. Hit it, broke a little bit past it. Now it's pulling back in on it. Ooh, it looks like we have this nice consolidation pattern working in where AMC is fading for us. Really seems to be that AMC was kind of riding on the coattails of Bed Bath & Beyond's run. And it's hard to really say with GME because it's consolidating after its run, as we are actually very much breaking down from it.
Need to confess. Need to confess. Need to confess.
It's funny, there's so much going on. I'm used to analyzing these markets mostly in my head, and I gotta admit, it's funny when there's not too many people on the stream. How do you spark up a conversation with yourself is the question. I mean, because if I'm just sitting here by myself, I'm just gonna rap and... But still, I see no changes. All I see is racist faces. Say hate makes for disgrace for racists. I wonder what it takes to make this a more better place. All right, well, why don't we do a little bit more trading? Looks like we might be warming up for another opportunity here. Still waiting for a breakdown. I mean, Jesus, tell you what. Seems like a really good opportunity for us to take a break on the stream, too. It's 12 o'clock. We'll come back for 1 o'clock. And see what the reverse repo program has for us. Yeah. So I think that's the case. So rock on, people. I'll catch you in 1 hour. Oscar, you drive safe, brother.